Hello friends and welcome to Realty Buzz. This is Mansi Dave and let's take a look at the top stories on real estate sector. The repo rate cut by the Reserve Bank of India to the tune of 25 basis points today has cheered the real estate sector. The rate cut will help developers in managing the property prices and improve sales. The 25 basis point cut by the RBI is a prompt move in the right direction. This would help developers to manage prices and increase volumes of sales, resulting in an overall boost to the sector. Bank reducing the interest rate will help common man to invest in real estate sector. The real estate sector has been struggling with dwindling sales for some time now. A CBRE report had pointed residential property sales declined by about 30% year-on-year by the end of 2014 in the 7 leading cities of the country. The PhD Chamber of Commerce and Industry too has welcomed the move. The common man will be benefited with softening of EMIs on loans, says the president of the chamber. A source says that with 2 cuts in the span of 1.5 months, the Apex Bank has been given the right signals and it's time banks reciprocated. The RBI has reduced the repo rate by 25 BPS on 15 January too. Not just sales, the supply of residential units too has come down. The number of new houses that were completed by real estate developers in 2013 came down 54% to 256,464 units in 2014 in the top 9 cities. Well, this is a welcome move by the RBI. The message is very clear from the RBI that it wants to revive the economy and that will in turn help the real estate sector too. These are few steps, the first in the series and rate cuts that is expected. But for a real revival in the home sales, home loan rates have to come down by 9 to 9.5%. It is likely that there will be a surge in corporate lending which would benefit the real estate and construction sector firms too. The recently announced budget did not offer much for the real estate sector, but today's development on cutting the repo rate would bring some respite to real estate lending and put demand in the coming thoughts. The next story on board is Prime Minister Narendra Modi's pet project to build 100 smart cities has been the talk of the town since the new government was sworn in last May. But to the surprise of everyone, there wasn't even a mention of it in the budget 2015. While much has been said about the features and facilities in the new smart cities, very little has been discussed on the execution front, and experts say the current plan is nothing more than a statement of intent. Smart city generally refers to a city using information technology to solve urban problems. These cities, for instance, will have sensors to monitor water levels, energy usage, traffic flows, and security cameras, the data from which will then be compiled and integrated into a smart grid and then fed into computers that can focus on making the city as efficient as possible. However, the word smart has been very loosely used so far, and the definitive blueprint is still awaited. And here are the 5 important things that the current smart city plan of the Indian government could do with. A smart city should be inclusive of all sections of the society, be it rich, poor, young or old. The city should have place for all citizens from rich to poor, or else the lower rung of society will be forced to find solutions outside the legal framework, which will form slums around the cities. That's not good. The homes, schools and hospitals in the city should be built for all income segments in the society. In terms of funding, the government had set aside around Rs 7,060 crores for the development of 100 smart cities, which was originally promised in the Bharatiya Janata Party election manifesto. But according to the source, India needed an allocation of at least Rs 50,000 crore for smart cities to make the vision more credible. A source suggests an option for cities to issue financial instruments for their funding needs to be there. The smart city plan should have a clause which allows the city to issue instruments such as bonds. Well, if we talk about the quality of life, there are 2 purposes of developing smart cities: to provide a fillip to economic activity and to improve the quality of life of residents. But what does the government mean by a better quality of life? No one is talking about the property definition of better quality of water, power and air that will be available in smart cities. Also, there is no mention of the width of the road. With respect to sector-specific city planning, the government should focus on a definite plan for sector-specific development of smart cities. Every smart city should focus on one particular industry and the planning should be according to that. If everyone will focus on the IT industry, then we will end up competing with each other. Just to bring it into perspective, the planning for water purification will be different in Kanpur, which focuses on the leather industry, compared to Bangalore, which is an IT city. If we talk about single authority, a smart city should have a single in charge, just like a mayor. And now, let's take a look at Gujarat, Rajkot. Coming down heavily on tax evaders and defaults, the Rajkot Municipal Corporation (RMC) sealed as many as 38 properties in different parts of the city after their owners failed to pay their dues, despite several notices. According to the Assistant Commissioner of RMC, besides the sealing procedure, one shop was put on auction and fetched Rs 5.65 lakhs. The properties were sealed in Bapunagar, Aradhana Chowk, Sorathia Wadi and near Jilla Garden. We have intensified our tax collection drive in the city. The owner of the shop located on Sahyog Complex did not pay Rs 1.45 lakh tax in dues. Therefore, it was auctioned, said the RMC official. Till now, the collection is Rs 149 crore as property tax dues and are working on war footing to achieve a target of Rs 190 crore for the current financial year. We are confident that we will achieve the target, said a senior RMC official. So far, RMC has auctioned over 14 properties whose owners did not pay dues. We first seal the property, and if the owner fails to pay tax, it is put on auction to recover the dues, said an official. Till now, over 2.25 lakh people have paid property taxes. There are over 3.65 lakh taxpayers in the city. Pre-sale residential property prices in Bangalore have touched a new high amid growing demand for high-end luxury projects. Industry experts say pre-sales rates hit around 30,000 per square feet at an upcoming residential project in upscale Sadashiv Nagar, which is being developed by Vista Spaces. According to them, this is the highest residential pre-sales capital value in the city's history. The project offers 11 units in a 12-story residential building overlooking the Sunki Lake. The apartments are being sold only by invitation. Each apartment will cost around 9.5 crore. There is a huge demand for ultra-high-end luxury projects. Their strategy is to construct limited number of units in Central Business District. They sell around 40% of the units before launch without any brochure. The entry-level price in Sadashiv Nagar is 16,000 per square feet. This is by far the highest price sales value garnered by the residential project in Bangalore. There is a very strong demand for plots, but unfortunately there is absolutely no supply. So the next best alternative for any buyer is to look at the ultra-luxury project around 18,000 per square feet. However, even at 30,000 per square feet, Bangaluru's property rate is still away below that of Mumbai and Delhi NCR market. And the next big talk of the town, hundreds of buyers waiting for possession in their flats in Noida Extension have been caught by surprise after builders of various prominent projects sent them notices demanding additional payments under various heads such as farmer compensation charge and labor welfare charge. Although the farmer compensation charge was in offing more so after the UP government approved an additional 64.7% compensation to farmers, buyers alleged that the possession payment demand notice they have received by arbitrary and the builders must explain how the charges have been calculated. We have been told that all the expenses the builders have borne towards creating shelter for construction workers, makeshift schools for their children and other facilities would have to be paid by the buyers. We fail to understand how such charges can be slapped on the buyers, said Indrish Gupta, co-founder of the Noida Extension Flat Owners Welfare Association. The buyers have been negotiating with the builders for extension, relaxation of the charges. The buyers claim we are hard-pressed for funds. Charging us for electricity or water connection is okay, but such arbitrary charges are not fair. We will have to take legal actions if the charges are not revised. A prominent builder, which has already started giving possession of flats in its Noida Extension project, has demanded an additional Rs 50 per square feet under farmer compensation charges and Rs 20 per square feet under labor welfare charges. The final possession demand could be as high as Rs 5 lakh for a 600 square feet flat. The Reserve Bank of India's second surprise rate cut outside the regular policy review may not boost the housing demand immediately, but is being seen as reversing the direction of rate cycle and kickstarting the housing demand. Developers are excited by the move to soften interest rates, which should make home loans cheaper and help improve the sluggish sales scenario. A possible reduction in construction finance currently available at up to 16% is also seen helping them cut financing costs. The rate cuts announced in January had not translated into action by the banks, but the cumulative cut now amounting to 0.5% will enhance lending powers of the banks. It will allow banks to cut down interest rates on home loans, enabling new consumers to take advantage of the low interest rates in the real estate market. Recently, RBI slashed repo rate by 25 basis points to 7.5%. It had earlier reduced the rate by 25 basis points on January 2015. The rate cut may not revive demand immediately, but there is an optimism, and positive sentiment is finally moving towards ground action. Experts say these cuts will translate into sales possibilities for developers and reduction in their construction finance costing. The demand for housing has been weakening for nearly 2 years now in the backdrop of unaffordable property prices and high interest rates. And it's an alarming signal. Home buyers beware. Lenders can auction away your property if you default on EMI. In the Union Budget 2015, the Finance Minister proposed that non-banking financial companies, NBFCs registered with the Reserve Bank of India and having a set size of Rs 500 crore and above should be considered as financial institutions under the Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act, SARFAESI Act, which is 2002. This change has been made to bring parity in regulations governing NBFCs and other financial institutions in matters relating to recovery of loans on time. Now the question is, what is the SARFAESI Act? This act allows banks and financial institutions to auction assets allocated as security against a loan when a borrower fails to repay her loans as stipulated in the loan agreement without any intervention of court of law. This helps banks adopt measures for recovery on reconstruction and reduce their non-performing assets. The Act also covers an individual who has taken a home loan to buy a property. According to the Act, if the borrower fails to repay her home loan, the lender can go for auction of the associated property, be it a residential or a commercial property. When you take a home loan to buy a house, you are supposed to pay back in the form of equated monthly installments, which is EMI. The installments have to be paid for a fixed tenure and on a particular date of every month. Typically, a bank only charges a nominal late fee if you delay in payment of the EMI. But if you delay in subsequent EMI payment as well, the bank will send you an intimation reminding you about the payments. After 3 consecutive instances of non-payment of EMIs, the bank will send a demand notice asking you to pay your dues along with the late fees as early as possible. The demand notice is typically sent to the borrower as well as the guarantor. It calls upon them to pay their dues in full within 60 days from the date of the notice. If even after repeated follow-ups and lapsation of notice period, the borrower fails to pay the EMI, the lender declares the loan as the NPA, the non-performing asset or the bad loan. After that, it is taken possession of the property. Then it earlier either sells or leases out the property or assigns the right over the property to another entity to manage it. After sale of asset, the lending institution keeps the outstanding dues and keeps remaining money, if any, to the given defaulting borrower. Well, now the question arises, when is this act applied? This act is only applicable where the outstanding dues are more than 20% of the principal and interest amount combined or above Rs 1 lakh. NPA should be declared backed by the security charged to the bank by way of hypothecation or mortgage or assignment. Therefore, all borrowers should take care to repay their EMIs in time, or else you are in pain. If for some reason you are late in paying one installment, do ensure that the subsequent ones are paid on time. Failure to do so can have dire consequences. So, on this note, it's a wrap around for the episode of Realty Buzz. We will be back with more on these. Till then, goodbye, take care, and keep watching Spin TV.